You're excited about building your portfolio, but you think you're going to need to turn to commercial loans to keep going? How do you get one of those loans? Today I'm interviewing Jenny with Enterprise Bank. She's a commercial lender that I know and have worked with for several years now, and we're going to take you through how to become an ideal borrower for a commercial loan. Let's get started. How did you get into lending and what do you enjoy about it?
Well, I love lending. I love the small business environment and new borrowers, seasoned borrowers. I've been in lending my entire career. So how I got into it was just kind of organically through a training program, originally through Boatman's Bank, and then took some time off to raise a family and have been back with Enterprise Bank now for 12 years.
So tell me about how you work with real estate investors.
So with real estate investors, it's a little bit of a different process because we have perfected a process for lending. We're comfortable with real estate, especially in the St. Louis market, both commercial and residential. It makes it a little bit easier because it is a hard collateral that we're comfortable with lending. We have a very streamlined process at Enterprise Bank for lending on real estate. We try to verify things like cash available for down payment, a budget for any improvements or renovations that need to happen on the property, rent rolls, things like that. But it's a process that we're comfortable with and that we do a lot of at Enterprise Bank.
So how does your underwriting process differ from other types of lenders? How much do you look at the borrower versus the property during the process?
So borrower and property are equal. We look at the borrower and the property in the same level, basically. Experience in real estate lending is obviously key, but we will look at first-time investors. Sometimes the process is a little different if it's a first-time investor, and that we may look for a little bit more down up front, or we may change the terms just a little bit until we're comfortable with the relationship and the client is comfortable with us. That's a big part. We're very relationship focused. We're not a transactional bank. So our underwriting is a little different in that regard because we want to establish a relationship. So we want to make sure that the client is comfortable with Enterprise Bank, and we like to see accounts, operating balances on properties and things like that with the bank. And then we will go to the lending process, or we can look at it all at the same time, but it's very much relationship oriented, not transactional. The underwriting process itself, the underwriting and approval, is all local to St. Louis. We also have up to $150,000 on new loans. We have an auto approval system, so that makes it a little bit easier, a lot more streamlined, where we're not collecting huge financial packages up front necessarily. If something comes back as a little bit of a red flag through underwriting, we may collect more, but we like the process. The newer loans up to $150 being auto approved is a lot easier on us and on the client.
So what are the key financial readiness factors that investors should consider if they want to be approved for loans on investment properties? We're talking about credit score, DTI, reserves, anything else?
Because we look at the property and the borrower equally, personal credit is very important. We also want to see that the property either has plans to cash flow or is at a cost. If it's a flip, if it's not a hold or an investment property, if it's a flip, we like to see that the costs are within market value and within range, and that they're not improving a property over the market value. So we will look at cost to value as well as loan to value, meaning we want to see what the costs are compared to what they're asking to borrow. So we'll take a look at that. But on investment properties itself, we want to make sure that the rental income is sufficient to support the loan request itself. So we want to see that the borrower understands that process. We also like to see the cash that they have to put towards the project up front, which is usually between 25 and 20%, depending on the project, depending on the property, depending on the experience of the borrower. Again, we will look at first-time flippers or investors. That's not an issue, but we just want to make sure that they understand what they're getting into and that they have the cash and possibly the reserves necessary to carry the project through to the end.
So if someone has a credit hiccup or high DTI, what are some strategies to improve their borrowing profile?
A lot of times if we have to decline a loan because of personal credit, I always like to say it's not a no, it's a not yet, and here's what we need you to do to become bankable, or to, for us to take a look at the transaction down the road. Things like credit counseling can help, making sure that they're paying attention to their personal credit score so that when we present them with a problem or a concern, it's not a shock. So we want them to be aware of what's on their report and maybe give us a heads up if they think we might see something that might present a problem. But I always like to say these are the things specifically that we need you to do to become bankable. So it's different in every scenario. We have a lot of great partners that we can refer to for credit counseling if that's needed, but I think just being aware and being educated is very helpful.
So how do you handle borrowers who are strong in some areas, like income or assets, but weak in others, like credit, for instance, or maybe it's something else that they're weak in?
We always look at, the character of the borrower, the cash flow that's available to repay any loan, and then the collateral value. Those are three key things that we look at when evaluating. So if somebody is weak in one area and we can bolster the deal or make the deal a little less risky by boosting one of the other two areas. So for instance, if cash flow is a concern and we can take additional collateral or possibly lower the loan amount to make the cash flow look a little more presentable, that's what we do. That's my job, to make sure that if we're weak in one area, that we're bolstering the other areas to make it bankable or make it doable.
How does income documentation work for self-employed individuals or real estate investors?
We look at tax returns. So if everything is in the one individual personal tax return and it's one big ball of wax, then we'll look at the personal tax return, personal financial statement. If the borrower is a partner in multiple LLCs or has different ownership in different entities, we will definitely look at things on a global basis. So we'll collect any source of income that the borrower has. We want to make sure we're looking at the full picture.
What are the most common reasons applicants get denied?
I would say on a real estate deal, it's probably either the borrower's personal credit score or possibly the cost outweighs the loan amount. So in other words, they're getting in over their heads in terms of cost to improve a project versus what we feel the value or the market can bring in value. So when that happens, if there isn't sufficient cash to put to the deal to bring it back within guidelines, that would be a reason to decline.
What are some red flags that might kill a deal even if everything else looks good on paper?
I think an educated borrower is one of the biggest factors that we look at. Somebody that can come to the table and talk the talk, but also has the knowledge, not necessarily the experience, but has done their homework and they understand what they're getting into. They're talking with other people in the market, in the real estate investment world, or again, experience would be huge. So not having those things, not knowing the market or the environment or understanding what their risks are going into a project, those are definitely red flags.
What are some common mistakes you see borrowers make during the loan process?
One of the things that I always say to my clients that are investing in real estate is when you make an offer, make sure that the offer is in the name of the entity that's going to be borrowing. Make sure you give your banker more than 30 days to close a new deal on real estate, because we do have things like appraisals, environmentals on commercial properties, surveys, title companies, all of that we have to take into consideration, especially on deals that have renovation or construction involved. We have to get the budget. We have to make sure we're working with the general contractor to figure out how they're going to be paid throughout the process. So all of that takes time. So when I have a client that presents me with a 30-day closing window on a contract, we almost always have to amend that. I would say just be eager, be aggressive in your offer on a new piece of property, but also give your banker plenty of time to assess the deal and get it to close.
What do you wish more borrowers understood before coming to you for a loan?
In general, and again, I take full responsibility for it, but just educating people on the lending process. Talking to a banker prior to getting into the business, I think is great. I love doing things like this, getting the word out, educating clients on what banks look for in both a borrower and a deal and real estate investment. All of that helps in the whole education process. Being open, being honest, being upfront about any hiccups that might be on credit score or any other projects that have in the past that have gone wrong or things that they've learned from their experiences. I feel like all of that definitely helps.
How can someone make your job easier and increase their chances of approval?
The upfront, being proactive, having a financial package ready to go, understanding the financials. So if it's not just your personal tax return, if it's maybe a P&L from a business or, a rent roll, understanding the income, the expenses, the net operating income on real estate so that we can assess what that entity can afford in terms of a payment, that all helps in the process.
Can you share a story of someone who turned things around to become loan worthy?
Not necessarily on the real estate side. I was thinking about this when I saw that question, and there's a lot of education out there for real estate investors. So in terms of turning something around, it's very transactional. If one deal doesn't work, that doesn't mean the next one won't. I have lots of examples of people turning their personal credit scores around, or potentially a company, an operating company that maybe wasn't doing well, that we made some suggestions and recommendations and they turned that around. But I do know of a lot of people who have had poor credit going into a deal, have come to us asking, what can I do better? What do I need to do to become bankable? And it really is on the credit counseling side. Also, not having cash to put at a deal or not having reserves, and just letting that person know, save some money and come back the next time where, everything else looks great. So just things like that. But it really is deal to deal, and every deal looks a little bit different. So turning things around have a different meaning or a different look.
All right, so if you could give one piece of advice to someone who wants to be the ideal borrower, what would it be?
Be educated, be informed, know what you're getting into. I know I've said that before, but that really is important, and that does mean a lot. Professionalism is also something that I look for in a borrower or a client. Somebody that understands the business, even if it's a first-time investor, but knowing what they're getting into and understanding and having done their homework helps me a lot make that decision.
Thank you so much to Jenny with Enterprise Bank for taking us through some information about how to become the ideal borrower for commercial loans. I hope it's been helpful for you. Please leave your questions in the comments below and subscribe. We'd love to see you back soon. Keep learning, keep growing, and have fun.